tell us the difference between wealth management and financial planning. You just mentioned that, right? So what is wealth management and what is financial planning? And do you think clients actually mix this up?
That's a problem not from a client point of view, but I would say as an evolution point of view in India. Because if you look at US, the investment advisory is like a 50, 60-year-old. And in India, it's like a 10, 15-year-old. So it's very natural for clients kind of not to understand this fine prints and these minute differences. I think the way wealth management would measure their success is the return, is the performance of the securities. And the way financial planning would measure is that how much closer we are able to help you get to your goals, how much successful you can be in your life. So there is a difference. Both have a value. But what matters to client is perhaps, and very simple example, if let's say Sensex with some 30 years data has given some 14% return, which means if I can give you 16% return on a GYR ABC portfolio, then I think we have outperformed with 2%. Now the problem is what happens if your goal is actually needed to 18% and you're not able to meet the goal. Would that make us happy? That's a problem. So that's the difference.
Yeah, very interesting. So, wealth managers or even PMS to some extent is dependent on performance, which is a reflection of the fund manager's abilities. Okay. In case of advisors, RIAs, it's an AUM thing. So it doesn't matter whether the market went up, market went down, you're going to get your fees. So in situations like this, how do you explain to your client in a bad year, right? Now let's take 2022 when the Nifty was just 4% and you started the year with XYZ recommendation and now you're doing an annual review with your client and some recommendations have not worked out. I mean, that's a pretty normal situation. What is the conversation you have with the client? I mean, are there situations where he can tell you that, listen, you gave me a wrong product versus, well, this is the market and everybody got screwed. How do those conversations go?
See, first of all, we never design portfolios for outperformance in 1 year. Because the only way that I can outperform a portfolio in a shorter period of time is by taking more risk, right? By stuffing in more mid cap, more small cap, tactical, momentum portfolios, right? All that, doesn't really work. So that's the first problem. So we never ever design the portfolios to outperform in a shorter period. And I think we try and communicate that very well. So this is the first thing. The second thing that we need to keep in mind that medicine is decided by the doctor, not by the patient, right? Now having said that, the benefit of doubt is always given to the investor, and we would surely need to revisit that. Was there something that we could have done better on a hindsight, which can at least be a lessons learned for the future? But in general, we feel that security selection over a long period of time is not so much of alpha. The alpha is going to come, and we all know Carl Richards, investor versus investment return, and the behavior is the long-term determinant. And there's a study done on asset allocation. If you look at the work done by Roger Gibson in USA, Nick Murray quotes this very often. Over 90% of your returns are likely to be linked to asset allocation, holding period, disciplines like annual rebalancing. To a certain extent, how you can do a opportunistic movement if you have a decent defensive portfolio, let's say in a COVID period, or what is happening with US right now. Our advice is completely counterintuitive, that everyone is saying 2023 US is severe recession, everything is going to stop. We are actually telling clients that if you can commit for a 5-year, Nasdaq 100 is definitely looking attractive valuation. S&P 500, if you look at the JP Morgan Guide to Market, is suggesting that is available at a 25 years average forward P valuation. So, these are the kind of conversation we will have, and we will try to bring them back to the conversation that your success in life is your goal, is not how Nifty or Nasdaq is. So whether we are able to move forward with your goal or not is what we need to measure. That's the indicator, that's the measurement, that's the benchmark, not your portfolio versus Nifty. That's not the benchmark that we ever agree.